According to a recent CBS News report, China and India are going to surpass the United States in terms of economic ranking. My question is this a legitimate forecast or some liberal BS? Let's find out. All right, let's take a listen to what CBS has to say.
In Money Watch, a new report says the U.S. will fall as the world's economic leader by the year 2030. According to Standard Chartered Bank, China and India will surpass the U.S. as the world's most powerful economy.
The study looked at each country's purchasing power and gross domestic product. So joining us now to discuss.
All right, before we get into it, notice that they mention purchasing power. That's PPP, purchasing power parity. And this right there, using purchasing power, already distorts this forecast of the biggest economies in the world by the year 2030. I mean, you see just phenomenal growth. The U.S. comes in third. See, they don't even. This is the other thing too. I mean, another basic point is that this chart doesn't show units. They don't show how they define these units. So they have 64.2, 46.3, 31. I don't know what that means. CBS should know better. I mean, they should, if they're going to have a chart like this, define what the units are. Just put numbers. Just put numbers. I don't know what that means other than relative to other numbers. But again, if I don't know what these numbers mean, it doesn't mean anything. So I had to go to Standard Chartered, to the actual source, to find out what they're talking about.
China and India will surpass the U.S. as the world's most powerful economy.
The study looked at each country's purchasing power and gross domestic product.
Okay. So purchasing power is defined as how much in the target country, how much a unit of money will buy. And this is relative to a set standard of living. So, of course, China and India, and especially Indonesia, Turkey, Brazil, Egypt, these are countries that are right now, they're just barely skating by in terms of, I'm talking about the holistic approach or holistic definition. So in terms of political stability, economic stability, crime rate, things of that nature. And when you look at all metrics that define a standard of living, a high or an acceptable level of standard of living, of course, these no-name countries, so to speak, are going to rise up dramatically based on purchasing power, okay? But to conflate purchasing power with actual economic productivity, that's a very deceptive way to forecast out into the future. And look, we're only talking about a little over a decade out into the future, and you're already projecting. These are crazy freaking numbers. I mean, look at this. China at $64.2 trillion per year. Are you kidding me? I mean, right now, I have to look at the actual metric. Let me see if I have that pulled up. Yeah, so China, okay. In the year 2018, according to the International Monetary Fund, they have a GDP of 13.5 almost trillion dollars. So you're projecting out 12 years. 12 years later, they're going to have 64.2 trillion. Yeah, I understand that more people, and this is the justification. Let's listen to this expert. What she has to say.
Is CBS News business analyst Jill Schlesinger. Thank you very much for
joining us. Did you want to call me like Dollar Diva or something? I felt like you wanted to change my title.
You read my mind. You read my mind.
Right?
I was looking for something catchy in this Instagram, Twitter world. So let's talk about this study because it sounds pretty concerning. Give us the nuts and bolts.
Okay, so the reality is this is not new news, and I love Stan Chart, and they're great folks over there, but we have known basically for the last 5 years or so that China would soon surpass the United States as the largest.
We don't necessarily know that. You're assuming that. You're assuming that based on an arbitrary accelerator, based on historical data, that you're accelerating out. You're projecting out what their GDP will be based on, again, historical data. But you can't. That's not a great way to determine how an economy will grow because there's so many other things. Just like the trade war, that is a variable that you did not factor in. If a trade war occurs again in the future, that's going to have a negative impact on China's growth because they are dependent on the United States. You can't just take the Chinese economic growth in a vacuum. Okay, they grew. Let's be honest, they grew because they stole American technology or they stole technology from other developed nations, and they didn't. Obviously, they stole it. They didn't pay for it, and they damaged the relations with the United States. They damaged relations with other economic partners, and so the developed world, the international community, is less likely to trust China in the future. And this is one of the reasons, the underlying reason why we're having a trade war in the first place. It's not just because we don't like China for an arbitrary or some made-up reason. And we don't like them. We don't like the Chinese because they steal. They stole the technology. They essentially have run up their economic figures through theft. As George W. Bush once said, fool me once, shame on you. Fool me twice, you can't get fooled again, right? That's what George W. Bush says. So we're not going to get fooled again with the Chinese. And that will have a dramatically negative impact on GDP growth. And it'll certainly impact purchasing power. So they're not factoring in a lot of things to get their BS numbers. Let's move on.
Economy. Now, this makes sense. You have to go back in time a little bit. It may seem like, wow, this happened really quickly. But from about 20 years ago, when China entered the WTO, it moved from essentially an agrarian economy and leapfrogged, jumped over the Industrial Revolution and went into the technological revolution. And through these last 2 decades, the country has a very strange advantage in that, let's call it, it's a to the technological.
Okay, I'm going to stop it right here. Look at this second chart that they pulled up. So notice that this expert mentioned that China moved from an agrarian society to a technological society, which is true. They did do that. And of course, when you move, when you catalyze a paradigm shift like that, and in this case, I believe she said that they skipped over the Industrial Revolution, moved straight to the Technological Revolution. Yeah, so that's 2 paradigm shifts over a relatively short time period. Okay, but look, you're having growth, average growth of 20%, I guess, in the trailing decade of starting from 2010 as your anchor point. 20%, then you're saying that it moves up to 28%. And then by 2030, it's going to be a trailing average of 35%. No. GDP doesn't grow at that kind of an exponential scale, folks. Okay, there is something called a maturation point where you have this initial growth period, and then there's this expansion period, right? It just blows up very quickly, like the Bitcoin price. It just blows up very quickly. But once the economy matures or has already grown, has already peaked, it's not going to continue peaking higher and higher. We've never seen that. At some point, there is a correction, or at the very least, a slowdown in growth. So I don't understand where they're getting this, how the growth, Chinese growth, is going from 20 to 28 to 35. Next, they're going to say, I always go to 42, and then it goes to 50, and then it just keeps going up and up and up and up and up, without any kind of real perceived slowdown. It just keeps growing and growing. That's not how the stuff works. It's just like the financial markets. There are bullish phases, and then there are bearish phases, and you have to respect both, because it's an ebb and flow. It's not just constantly rising. So I don't understand Standard Chartered. I don't understand why CBS is not really pushing back at these numbers, because they're almost, it's almost as if they are trying to dumb down the audience, or they're assuming that the audience is so stupid that they're not picking this up.